Good morning, everybody. It's Monday, August 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 5 1/4 at 3.98. November soybeans were down 8 1/2 at 10.18 3/4, and December Chicago wheat was down 12 at 5.50 1/4. Good morning, guys. I think the big news here this morning is the meltdown in the outside markets. Currently have the Dow futures down just over 1,000, almost 1,100 here. S&Ps are down close to 200. Nikkei was down 12.4% overnight. So with that, Ben, maybe a few opening thoughts to start the week, and we'll throw it around the room.
Yeah, pretty volatile overnight across all sectors. We are seeing the dollar get hit pretty hard. Bonds are stronger. Just about everything else is red. Grains were interesting last night. We saw corn, beans, and wheat all trade higher. Weather forecasts moderated on the latest runs. They were not getting worse. And it's these are times where markets can get extremely volatile. Talks now of maybe an emergency rate cut in the U.S. I think that becomes really important to agriculture, where we have a really high capital needs and low margin. It's a big part of the equation for profitability. And I look at days like this, being someone who's traded some pretty volatile markets, is you have to look at things in terms of a bigger picture. As what would I do if we were 20 cents lower? What would I do if we were 20 cents higher? And getting caught up in the middles can be very difficult for people who are just trying to trade these things or chasing. So I think it's a good morning to watch and see how we trade. We did get down to right above recent lows in beans and right above recent lows in corn, and both wheat and beans traded over 20 cents off their highs overnight. So I would expect a lot of volatility. You can see on the volumes where we've traded after we broke down, there hasn't been a lot of participation and people put their hands down. A lot of people want to connect the dots that at some point there could be some cross-contamination in margin, and we'll have to come and cover some of these grain shorts. I think we're not that. I think we're a little ways away from that sort of a problem. We still have some really hefty gains in the stock market. We have very hefty gains in all the shorts that are in the grains, and the time of the year makes it maybe a little bit more patience to hold on to people that are embedded in strong, good positions. That can change quickly. Nothing happens in a vacuum. So it would be great to see some volatility work in our favor in both directions is kind of my thought here.
Dustin, you think the Fed waited too long on this cut deal? I mean, did we back ourselves into a problem, and now they're trying to figure out how to weasel their way out?
Yeah, it's hard to know. I mean, I think that they started cutting too soon last time around before Volcker came in, and then it led to runaway inflation. I think that the loss of faith in a stable currency would be a bigger concern for the Fed than perhaps putting us into a little bit of a harder landing than they wanted to. It's not really our forte too much to dive too deep into that, right? Like that's not our main focus. But I would just point out, like, obviously you turn on CNBC today and everyone's hair is on fire. We're just right back to where we were back in May in the stock market. We're still up dramatically on the year, and the fact they're talking about emergency rate cut based on a market reaction. We had one data point that was a problem. Jobs data was below or above estimates on the unemployment rate. So
it was interesting. They had Goolsbee on this morning. He's the Chicago Fed president or chairman there, and he said that report generally comes with a plus minus 100,000 buffer anyway.
Yeah,
I think that was an interesting point.
I think the real problem is we're all. The markets are all addicted to the juice, right? We've gotten so used to low interest rates. We get into what would normally be a normal pattern of interest rates, and it shows how much leverage we have, how much debt we have in this country. And the possibility that we start losing faith in the U.S. dollar. I mean, there's a reason why gold's coming off all-time highs right now, and all hard assets are highly valued. I still think that there's a structural problem with debt, that we're not allowed to do the things that we probably should be doing in prior years. So, but yeah, first drop in the stock market, 2 days of 2% plus drops, and all of a sudden it's like emergency Fed cut. We need to go right back to the juice. It's like it's a perpetual, never-ending rate cut cycle where we're going to stay near zero until we've destroyed this currency. So I'm not really sure what to make of it. I know Japan, they have a 12% drop in the Nikkei overnight, and that's a huge number. That's the reversal of the carry trade. They're coming off of years and years of a zero interest rate policy, and their currencies hit multi-decade lows recently because of it. So Japan's one of our largest corn buyers, so maybe that has some influence here. We did have some very, very weak markets during the financial collapse. So if this were to continue, there's contagion and it kind of spills over to other markets, yeah, there might be some long-term concern. To Ben's point earlier, they are very short commodities right now. And so maybe it's not going to have the same impact that would have had last time around. But generally speaking, if we're going to start doing some sort of economic destruction because we get into a debt problem, that should be bearish energies. It should be bearish commodities in general if that happens. We don't want to see that. But at the same point, if they cut and they overdo the cut because of the first equity sell-off, and the dollar index is responding today, for example, as well, dollar index is down pretty good overnight. That jolts us back into kind of a weaker currency. A long-term is a tailwind for commodities, right? If we can't help but go and cut on the first sign of problems, I can't see that, but anything is more friendly long-term hard assets.
That's a good sign. So bringing it back to grain markets, I know we got our next report's going to be a week from today. We're going to get some FSA data that's going to be filtered into that report. Maybe just we've talked quite a bit on the outside markets this morning, Dustin. What are you looking at fundamentally, weather-wise, all things grains to start the week here? What's on your mind there?
Yeah, we're going to have to see where prevent plant numbers come in at. Everything bearish has been kind of thrown at this market yield-wise. I think most people are penciling in above trendline yield. How far above is the question? We have really good weather so far, but we still need to know what acreage came in at. We had kind of poor prices during that planting window. In any adverse weather, we often see higher prevent plant numbers during those types of years. Think 2020, for example. Huge prevent plant acres in 2020. And so, yeah, if we come back to that 90 million acreage number through prevent plant on corn, I think it's the pathway to balance sheet tightening is just a little bit easier. Of course, if we hit a 185 yield, then yeah, we're going to have an abundant corn supply. We go look at the spreads, go look at flat price. Everything's already kind of saying that. So how much of that is discounted and priced into the market is the question. I think we do have to get past that, DP problem, all the basis only contracts. The end of August, you get past that time frame, and I think a lot of that has been cleaned up. And then it's just a question of how much excess supply do we have coming off the combine, from excess yields. So
very good. Let's transition here for a minute. Ryland livestock last week slaughter down 1.2%, pork production up 0.7%, and the slaughter was up 0.8%. What are your thoughts here as we start the week?
Yeah, Dan. So, I mean, we saw a pretty massive sell-off in the cattle market as well, just kind of going alongside with a lot of this macro kind of panic here, but it was going into option expirations. So there was a big down and open commitment. It was down like 19,800 in the complex, most of that being from August. So now we're coming into first notice day today. There's going to be probably another repositioning. Hard to say if that means that there's just going to be a leg lower or something, but there was a really wide range of trade. So we broke hard, we broke fast, and a lot of that I think is going on, just the outside markets. Cash was down a little bit. We saw cash kind of all over the map last week. Live side was around 185 to 187 in Texas, 306 to 310 in Nebraska for dressed. So, I mean, we're seeing some lower trade, some steady trade, but generally speaking, about 2-3 lower. So, I think all eyes are on that right now, and it seems like we are kind of hitting this point where market's starting to realize that beef markets are probably going to start trending lower for the remainder of the year, just with some slight variation. Maybe we start seeing some upticks in demand. But yeah, the situation in Japan, I think, was bleeding in here, just considering they're one of our biggest buyers of beef. So I mean, I do think that's a part of this equation as well that's going to need to get just kind of monitored throughout this situation that we're all looking at. Funds are leaning. They really added to their long position here. And they were net long 75,000 contracts after buying 14,000 the previous week. So, I mean, they've got a lot of length. It's a kind of a moderate size amount, but you could see that if there's a big risk off here, it could still kind of give us, just a little bit more caution here. So overall, it just kind of feels like there's a bit of a wait and see mentality, just how this week shapes up on the fundamental side. And as far as hogs go, the funds have been the big supporters here. We have seen beef prices, pork prices start to rally here a little bit, but since came down on Friday. So we had cutout down about $1.55 and cash was down about $2.40. So it's kind of weakening data here. So I wouldn't be surprised if we saw a little bit of a correction here, especially with just what's going on in the outside markets here in the hog market. So, I mean, we'll see how it goes, but overall, it just feels like with the mass panic going on, it's going to be hard for the meats to kind of escape most of that for the time being.
Very good. Appreciate the update. We will be coming into the grain market open here this morning. Just one more readout on the outsides. Dow down 1123, S&P is down 207. Bonds are up a handle there, and Bitcoin's down 12,755. So should see a little softer opening in the grain markets. Anybody needs anything, questions, or wants to visit about markets, please don't hesitate to reach out to us. If you like the show and love it as much as we do, please give us a like and subscribe. Doesn't cost you anything to do so. Get you up to speed on all things AgYield, some premium content, keeps you posted on when the shows are coming live, which is every day that the markets are open. We are streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
Thanks, Dan.